Okay, let's go.
When you first start trading, you almost always begin with a demo account. It's a stress-free simulation where your money is fake, the environment is perfectly controlled, and making logical, calculated choices feels entirely effortless. In a couple of hours, anyone can learn how to hold a rifle, control their breathing, and hit paper targets on a quiet range. There are zero stakes, so there is zero panic. Because of this, these simulations trick new traders into believing that market success is purely an academic exercise. They start to think that if they just memorize the charts, run the math, and pick the right logical strategy, they will consistently pull in a profit. Mastering a demo account teaches you the mechanical inputs of how to execute a trade, but it teaches you absolutely nothing about the harsh biological reality of actual financial risk. That illusion shatters the exact second you fund your account and place your very first trade using real capital. Moving from a demo environment to a live market is exactly like stepping off a peaceful practice range and into a live battlefield. Suddenly, the targets are shooting back at you. When a perfectly calculated financial strategy collapses, it rarely happens because the underlying math was flawed. It fails because the human brain is entirely unequipped for the intense psychological warfare of watching real money evaporate in real time. To survive a live market, you have to stop relying strictly on formulas. You have to build tactical psychological defenses against your own paralyzing fear and reckless greed. In a trading environment, every emotion manifests as a severe, involuntary physical reaction triggered by a specific thought. You watch a stock plummet. This instantly creates a panicked thought, triggering a flashing warning signal in your brain's frontal lobe. This commands your pituitary gland to act, dumping a flood of stress hormones directly into your bloodstream. This sudden rush of cortisol and adrenaline physically restricts your brain's ability to access its logical processing centers. You are literally incapable of doing the math. Once this biological cascade occurs, a physiological survival response completely hijacks your ability to execute strategy. Take the massive run of UK building stocks starting in 2009. For years, the sector generated hundreds of % in profit, creating a massive bull run before hitting a sudden, anxious stall. This photograph captures the intense atmosphere right before the Brexit vote. The chaotic, emotionally charged uncertainty bled directly into the financial markets, stalling momentum. During this lull, a trader looking to buy back into the building sector faced a choice. They could buy objectively strong, data-backed stocks like Barrett or Bellway, or they could pick a company they had already profited from years earlier, like Galliford Try. The trader chose Galliford Try. They completely ignored the superior current data for Bellway because they had fallen in love with Galliford Try after a previous big win. Nostalgia-driven capital allocation forces you to trade your own fond memories while the current empirical data of the market goes ignored. The harsh reality is that most traders will bleed massive amounts of capital before they ever figure out that their biggest obstacle isn't the market itself. Their biggest obstacle is their own mind. If you walk onto the floor of the London Stock Exchange, shown here in all its aggressive, hyper-competitive chaos, and try to pitch the benefits of meditation or mindfulness, you will be laughed out of the room. To bypass this massive ego barrier, trading psychologist Steve Ward translates these exact concepts into the stark, tactical language of military special forces. In the military, elite soldiers use rigorously practiced psychological grounding techniques to remain totally present and functional while under actual enemy fire. The same rule applies at the trading desk. Traders have to use these exact grounding techniques to aggressively shut out panic about the future and regret about the past, forcing their focus strictly onto the immediate data in front of them. In high-stakes environments, total presence functions as a tactical cognitive weapon necessary for survival. To achieve this tactical presence, legendary trader William Gann established an ultimate, non-negotiable metric for risk management, the sleep rule. The mechanics are simple. If anxiety over an open position is keeping you awake at night, your biological exposure to risk is too large. You must systematically sell down your shares until your nervous system regulates and you can finally sleep. This historical image of a Japanese factory floor demonstrates our second framework, Kaizen. Kaizen is a business philosophy focused entirely on continuous, microscopic improvements to a process over time. Applied to trading, Kaizen means you should leave your demo account relatively quickly to experience real biological stress. But you do it using micro accounts, risking only pennies per point, taking tiny steps to build your tolerance. The final framework requires taking deliberate time every single day for forced mental stillness. Thinkers like Eckhart Tolle call this practicing the power of now, deliberately severing the chaotic loop between your thoughts and your physical emotions. You support this mental state with strict physical maintenance. That means forcing yourself to take very small, controlled losses to remove the fear of them, and hitting the gym every single day to physically burn off lingering market cortisol. The financial market is an untamable, entirely unpredictable force of chaos. The only variable in that environment you will ever truly have the power to control is your own mind.